So good morning, everyone, and welcome to our panel discussion on sending money to and within Africa, cost reduction and market realities in 2023. We're delighted to have you here today as we delve into an important and extensively debated topic, which is cost of remittances. As we gather here today in the past 1.5 days, I can't help but notice many familiar faces in the audience, many of whom have been actively involved in discussing the drivers of high cost of remittances and the remedies for many years. Some of us may even have a few gray hairs to show for it, including myself. But today, however, we aim to take a fresh perspective on the topic, on this topic that has been well debated over the years. In addition, our panel includes experts from diverse backgrounds, each with a unique vantage point on along the remittance value chain. With their insights and experience, we hope to shed new lights on this topic and provide a comprehensive understanding of the challenges and opportunities in reducing remittances costs. So for those of you who haven't been following closely, I know it's hard to stay awake in the past day and a half. It is important to emphasize that Africa is and remains and is the most expensive region to send money to, with an average cost of 8.64%. But it's not all doom and gloom. We've seen significant progress in regions, especially in North and Western Africa, with costs now reaching below the global average. On the other hand, Eastern and Southern Africa continue to face greater challenges, with costs surpassing the global average indicators. And yesterday we heard a lot from different panelists that intra-African remittances, they should mirror domestic transfers in terms of costs, in terms of experience, etc., but they remain very costly. In fact, 7 out of the 8 most expensive corridors, with average cost of about 20% globally, are originated from and destined in Africa. So with affordability being the center of this panel, I just want to bring us back to one key point, that let's not forget that reducing the cost of remittances and reducing cost is not an end. It's a means to an end, or many other ends, many other development ends, including financial inclusion, economic growth, greater food security and agricultural production, women's economic empowerment, and health protection. So over the next hour or so, and Pedro, I promise we'll stay on time, our goal is to identify actionable steps and tangible solutions that both the private and public sector can undertake to make remittances in Africa more affordable and accessible. Once again, thank you all for being here today. We have an incredible panel of experts lined up. Without further ado, I would like to invite our esteemed panelists to kickstart the discussion by sharing where their companies sit in the remittance value chain and who their customers are. And ladies first, Sabina, I'll start with you.
Hello. Thank you very much, Nika, and thank you to the organizer and IFAD for giving me the opportunity to represent Africa Nenda, a team of payment experts sitting on the continent with the sole purpose of working with partners to develop instant and inclusive payment system. So with regard to where we sit, I would say at the infrastructure level. Regardless of everything we do as an industry, if people don't have access to the payment rails, nothing else can happen after. So this is exactly where we at Africa Nenda work, and we work with central banks, government, private sector associations to provide the support needed in the development of these projects. So whether you are at the beginning of that value chain, you're starting a project to put your payment system together, or you are at the end of it, you have the payment system and you are trying to bring more skill to it, we are here to provide support on project side, but we also do a lot of research, advocacy, and also capacity building. And from a research side, we're really focused on collecting data and insights on instant and inclusive payment systems in Africa so that we can support more evidence-based policy making in favor of the more than 350 million Africans that are still excluded from formal financial services.
Thank you. Next, Sandra.
Good morning. Thank you. Welcome to Kenya. Welcome to our winter. For some of you coming from your warm weather, sorry about that. My name is Sandra Yao. So as I travel across Africa, a lot of my African friends like, are you from West Africa? Are you from Ghana? Are you from Cote d'Ivoire? So I'm originally from China, but I've been Kenyanized. So my better half is Kenya, so I've been in Kenya for 18 years, and this is home. I work for an organization called Tunes. We are a global payment network. We started the business about 7 years ago. In the last 7 years, we've done a lot of work. We now cover 130 countries. Where do we sit in this value chain? We are the connector. We're right in the middle to connect banks, money transfer operators, PSPs, mobile wallets providers. Today we have the privilege of working with all the mobile wallets providers on the continent, MTN Money, Airtel Money, M-Pesa, Orange Money. We make payments anytime, anywhere, and instant. Just about half an hour ago, I had to be pulled out of this conference because we promised you guys a cocktail tonight, and apparently the money did not receive. What a surprise, but I'm sure that was not our rails, so I had to go and swipe my card. So cocktail is back on, and I look forward to see all of you, and I look forward to this exciting panel discussion.
Thank you. Andy? Thank you.
Thanks, Nika. Morning, everybody. My name's Andy Jury. I'm the CEO of Makuru. Makuru is a next-generation financial services platform for Africa's emerging consumer. So we really focused on providing transformative financial services experiences to our customers, focusing on the bottom of the pyramid. And so we focus on financial flows and payments into, within, and out of Africa. Most of our customers come to us from the informal network of networks. 95% of them have never touched a bank account or a digital store of money before. So it's really about financial inclusion, about walking a path with our customers towards greater degrees of digitization, access, and enablement. And so whether you want to send money, store money, spend money, save, or secure money, we've effectively built up a portfolio of solutions that serve our customers. So we really focused at enabling engagements with customers and partnering with some of the other players on the panel today to ensure that we can facilitate the products and services that our customers need and want. We've been in existence for 18 years. The heartland of the business is originally in Southern Africa, although we've painted broader Pan-African solution over time, and have served 12 million customers, 7.5 of them in the last 12 months.
Thank you. Christian?
Hi, good morning. Thank you, Nika, and thank you for GFRID for the invitation. My name is Christian Kajeneri. I come from Rwanda. I work for MTN Rwanda, but precisely Mobile Money Rwanda, a subsidiary of MTN Rwanda, where we focus on fintech services. So my day-to-day role, I do strategy, product, and services. In that case, I'm here to discuss what we do with people like Tunes, MFS Africa, those aggregators, money transfer operators, even banks. So it's quite big. Where we are today, mobile money do more than 90% of value transaction in Rwanda. We exceeded the GDP of Rwanda last year. So the GDP of Rwanda Last year was around 10.7 billion USD. Last year, what, 11? This year, the GDP is 12 billion USD. We had 15 billion. And I think in a few minutes, I'll discuss the contribution of remittance for that pie. Thank you.
Thank you. And last but not least, Ruling. Thank you.
Good morning, everybody. I'm Ruling Abs from a company called Bank South Africa, from South Africa. We've been serving the South African market for just over 52 years as a trusted payments processing provider, focused on national domestic payments. It also extended our involvement in the broader SADC community made up of the 16 member countries, where we specifically spearheading the implementation of a regionally based cross-border payment service, traditionally focused in providing infrastructure, typically playing in the middle mile, but also taking up the responsibility for the establishment of the broader inclusive scheme, which also focuses us across the value chain, as our members signing up for the service is traditionally functioning as financial service providers within the first and the last mile. And we see our role in that, similar to what we do in the South African environment, as a key enabler of making transactions where it's really needed a reality in those markets. Thank you.
Perfect, thank you. So the first question is for Andy and Christian. What are the key trends in African remittances, and what role have digital service providers and fintechs played in revolutionizing the space since the pandemic?
Are you happy with me to kick off? I think it's important to sort of anchor that there isn't a one-size-fits-all approach. Africa is not a homogeneous operating environment, regulatory environment, access to infrastructure or demand pools. And so from our perspective, covering a range of different territories with a range of different sort of circumstances, we see two broad trends. On the one hand, there has been a secular shift towards formalization and greater degrees of digitization. The pandemic certainly acted as a catalyst where it disrupted traditional informal networks, forced people to go in search of other alternatives. They had a transformative experience and they stayed. And one of our the key cornerstones of our capability is that we believe in providing an omni-channel service that focuses on interoperability and provide customers with as much choice and access as possible, which enables them to make small but continuous changes towards full digitization, both of the channels that they use and the types of money that they use. And certainly we continue to see that probably happening in most of the territories in which we operate. Bear in mind that the informal network of networks is the gift that keeps on giving. Even today, in excess of 65% of payment use cases and people across Africa operate in this informal, over-the-counter, cash-to-cash and synchronous environment. And so that's a source of huge opportunity if you can drive that scale towards formal inclusive markets. But on the other hand, we actually in some markets see this concept of de-digitization or a reversion to the informal networks. And I think it boils down to the degree of trust that the broader communities and potential customer bases have in formal financial services providers, regulators, the sort of formal banking environment. And so in some places, there is a reversion to informal flows for remittances, particularly where there's emergence of parallel exchange rates. And I know Nigeria is a topical place at the moment, but it's an example of a place where there's been quite a wide divergence between the formal and informal rates, which has created an incentive for customers to revert back to informal methods, notwithstanding all the sort of risks associated with that. And there are other examples across the continent. Kenya, to a degree, has that. Ghana, Ethiopia, Malawi. And so some of those places are facing headwinds that other places are not. And the concept of, I suppose, digitization or digitization comes about where there is a lack of trust in whether your balance is going to be in a bank account tomorrow. And so in some places in our ecosystem, Zimbabwe is probably a prime example, there's a premium on physical folding cash, and so it's actually been a market that has reverted back down the sort of digitization evolutionary curve. And so it isn't a one-size-fits-all, which means that if you operate in a Pan-African environment, you do have to ensure that you have the dexterity to provide solutions that are relevant to what customers want in a localized environment, and trying to leverage off the scale and efficiencies that having an overarching cross-border solution provide to you.
Perfect. Before we go to Christian, actually you mentioned some point around parallel exchange markets, and obviously Nigeria in the past 2 days is the topic that everyone is discussing. How do you guys as a business balance your strategy in some of these markets, knowing that you're responsible to your investors, your board, in doing business ethically, but you have to also address the barriers in those markets, and your basically customers want to send to those markets as well?
It's interesting, and I suppose those are the things that keep us awake at night, but those are the potential, finding solutions to those potential challenges are the things that fuel opportunities. And Mukuru as a business has done this over the course of the last 2 decades, and having to adjust and understand local solutions. I think first and foremost, like everybody else, you've got to be aware of the liquidity constraints that these idiosyncrasies provide, and make sure that you aren't stuck in a position where you can't, expatriate funds up to holding companies, because that makes it very difficult to then reinvest. And what we've done is worked with local regulators, worked with our teams on the ground, and so everywhere in which we operate in Africa, we have boots on the ground per se, leverage the local knowledge, understand where there are opportunities to make markets, where there are other ways in which you can facilitate liquidity, ways in which you can incentivize inbound remittances to happen through formal pathways. And there is a very well-trodden path of diaspora remittance incentive schemes that have worked exceptionally well in the past. And I suppose make sure that you don't overextend itself. So it's really about trading on a daily basis and making sure that you understand what's happening on the ground.
Perfect. Thank you so much. So, Christian, over to you.
Thank you, Nika. A great question. What are the new trends? It had been for a while or a long time that it was remittance in was more from the West, Europe, US, and so on, where the behavior was more, you have African migrants sending to their relatives, and in that context, they're poor relatives that didn't need money. And even from the business side of MTN, it was a by-the-way revenue. Sad fact, when I joined MTN, I was coming from another bank, and that bank was making higher revenue than MTN. And MTN Rwanda has more than 4 million customers, and that bank, I think, has like 900,000 active customers 30 days. When I joined MTN, I was like, this is crazy. How come that bank is making more, at least 40% more? And they're telling me, no, it's a cash pickup. They're making, the cash pickup business is still high, and so on. And maybe the pricing on FX. So the new trend is intra-Africa transaction is making more revenue for MTN Rwanda than what we receive from abroad. It's an amazing fact. It's an amazing fact. I don't know if it's the pandemic, but I think the Pan-African spirit, we're realizing there's more money that is left on the cash side that is not transacted digitally. Another trend is most remittances are focusing on FX. FX, even though it's at the cost of the consumer sometimes, but it's an area. Another new trend is AML KYC. Regulators are becoming more stringent because of the illicit transactions. And of course, the cash pickup is reducing hugely, at least as far as I'm concerned, in the context of MTN Africa mobile money. There's a huge reduction that we see. I'll give you an example. In Rwanda, we do more than 62%. Out of that 62% digital transaction, It used to be the other way around, where transaction digitally was done, was only 35% accounted, and today is 62%, and mobile money terminated more than 45% of that. Others, hubs and all that, so it's a good story. Thank you.
Thank you so much. So, Ruling and Sandra, this question is for you. In your view, what fundamental changes are needed to move the needle on affordability and cost reduction in African remittances? Yeah, I think Ruling, this time you go first, but yeah.
Thank you. Yeah, I think, and my point of reference will be SADC. And I think looking at the SADC market compared to what we've seen and experienced now over the last day as well, it's got a little bit of catch up to do in terms of where we're at. Been traditionally very much an underserved market. I believe where the potential of the market is not well understood. I think something that comes to the fore is the challenges and the high cost. And yeah, that's a known fact. But I think typically misunderstood in my mind is the market itself, its potential, and how to unlock that potential. And I think almost a market hamstrung by what is currently available to them. That is already an offer. And the existence of the more traditional payments services at the end of the day. And I think for SADC in itself, I believe that there's a little bit of a mindset shift that's required. And you're absolutely right. I mean, cost is a means to an end. Everybody's focused on the cost, but why? Because I think we're trying to serve a market that's in principle underserved. It's the high degree of informality. Why? It's not accessible. It's not affordable. And these are the things that we should be thinking about. But it also should be informing what problems we're trying to solve. Because I sometimes feel like we're getting stuck in trying to solve problems that might not be problems. And I think the answer, and there is no one answer, and I think I agree with Andy, being a good point in saying that there is no silver bullet, black and white answers here. I think there's hybrids that need to serve. I think in our specific drive is to say, but how do we interconnect? Because there are good solutions out there. There's good movements being made. How do we interconnect all of them to enable us to reach the market in terms of where it's at, but also meet their specific needs? And if that is the center of attention and we can focus our efforts around how do we provide affordable services to the market, and we try and get around the table and solve for this. And that's why we such a good supporter of broad-based interoperability. To say is that in yourself, there's networks that's been formed, that's been established, that's been implemented. Huge investments has gone into those, and they're serving a very specific purpose. But why are we not spending more time in getting these networks to serve a much broader community in specific needs? And I think we've got to think about it, because why are we reinvesting in infrastructure? I mean, we're talking about cost is the underlying driver at the end of the day. So why aren't we not chipping away at those things that's unnecessary, that can be reutilized across? So that immediately drives down the cost of it. Yes, there's barriers and challenges that we need to face. And yeah, but yet again, it draws me back to how do we reconfigure the models so that we get the right people around the table to solve for those specific problems within specific contexts. Later on, we'll discuss around the Pan-African drive. Solving problems at continental level is very difficult. When I can contest about it, because when I'm sitting in a regional context, it is unbelievably complex. You're sitting with 16 diverse markets, very specific nuances in terms of what the needs are within those markets. One thing we do know, it's underserved. There's huge potential for growth. We've got to go and create markets at the end of the day. And I think that is what we also need to keep in mind. It's not just about getting services to, it's also about stimulating economic growth within those through whatever services we offer. So you see, there's these little things I think that needs to draw us back. I think there's a level of mutuality that's required if you want to solve for a certain problem. That draw people around the table to say, let's go and sit and figure it out. Because I do believe there's solutions to every single one of these. In all the countries that we're actually touring at the moment and introducing the TCIB network to, it's almost like we forgot how to dream. You know, I think we can say as much as we want to about some of the global players, the card providers, and what they've done globally. But that piece of plastic, and today the plastic is also disappearing, but what did it mean? It was a token of mobility. But a token of mobility came with a badge, which was representative of a standard that could be trusted. And I think today we've got other vehicles of mobility that we need to capitalize on. And that's what we need to start thinking about. And those are typical the mobile drives that's actually happening at the moment, because that's now the new token of mobility. Now we've got to actually be able to create the same level of trust and instill that and all the benefits that comes with that. And that requires networks to interoperate and work together.
Perfect, yeah. So on that note, interoperability tunes.
Thank you. To touch a bit on the broader question, I think post-pandemic, what were the most challenging things we see in the markets in the last couple of years is the inflation, the volatility of the currency, and the unavailability of hard currency. When we talk about payments and trade, for instance, the trade cannot happen without payments flow. And payments cannot flow without the availability of hard currency and without the support of the government policy and the regulators' support. I think for us to be able to achieve, we require quite a number of things. Working together, we need to come together. And when we are together, it's always better, always stronger. Government policies and regulatory policies will drive the cost of doing business in our markets. Collaboration, coming together, will help us to reduce the cost of operational cost if we share our infrastructure resources and talk about interoperability. Today, Tunes have managed, and we are very, very grateful to the regulators, to our partners like M-Pesa, MTN, again, mobile money, and the banks. Today, we process about 200 corridors in Africa, connecting banks and mobile wallets, sending money across border, real time, from different country to different country. We started this in 2018. We had only 2 corridors. Today, we have more than 200. The ticket size between the intra-Africa corridors is about $20 to $60. You see people, these are the people, the migrant workers, they are not sitting in the office like this. They are the gardeners, the house help, the security guards. They have a job. They cannot leave their post to go to Western Union or a bank to send money back home, because they will not have that income. So working with these mobile wallets and the banks providers to allow people to be able to access this kind of service anytime, anywhere, and they can send money back home safely, real time. It is our dream. And I think we are going a step further by building an interoperable network is to allow you to travel to a different country and still pay with your home wallets. Today, we are live in Kenya, Tanzania, Uganda, and Ethiopia. Technically, we're still waiting for one central bank approval to launch this service. So what this means is I go to Rwanda next week, I'll be able to pay at MTN Momo Pay merchants from my M-Pesa Kenyan wallet. We are super excited about this, but without the collaboration with our partners, without the support of the regulator, we will never be able to do it. I think we just need to open up and have more open dialogue, bring more transparency in the business we do to give a lot more comfort to the regulator for this to be processed a little bit faster. Thank you.
Perfect, thank you. Shifting gears a bit, we're sitting here all talking about cost of remittances, and we hear a lot and heard a lot in the past 2 days about digital being the silver bullet. I want to focus on the customer and their views, basically, and that's where Andy and Christian comes in. What do you think is most important to the customer? Speed of delivery, options, digital versus cash? I know, Andy, you mentioned that digital is not going to work in all markets. We see a lot of markets that are heavily cash-focused, or cost. So what are the, are we sitting here thinking about indicators that are not relevant to consumers? And obviously bringing back Sandra's points around convenience, safety, security, etc.
Cool. I think the customer is experienced by a range of different things. It's not a single entity when you look at it over an average of averages. And so certainly cost or affordability is important, but that's really an order qualifier. In our experience, customers are looking for a balance in terms of somebody who's consistent, who turns up every day, who they can trust. Bearing in mind, most of our customers come to us from the informal network of networks, so they've never touched a digital financial instrument before. So there's a massive hurdle of inertia to overcome in terms of trust. But I really think it comes down to a balance of access, convenience, affordability, trust, and speed. And speed is important in terms of what you say on the sticker should come to pass. So if you say it's instant and then it takes you 2 days to get it out, that's a massive irritating factor. If you say it's going to be half an hour and you deliver it in 25 minutes, then you delight your customers. And so certainly in our experience, we don't focus on cost. What we focus on first and foremost is access, financial inclusion, getting more people to use our system, to understand the benefits of using formal financial instruments, the safety underpin associated with that, the convenience factor of access. And so we built an omni-channel infrastructure. We've got 320,000 cash in and cash out points. We want somebody to not have to take a lot of time off work, as Sandra sort of alluded to. It should be something that they can facilitate simply if they aren't transacting digitally. And so enabling that access, ensuring that you're consistent, builds the track record with a customer that enables you to then gain their confidence, walk a path. And the more they use your capabilities, the easier it is to then drop the breadcrumbs that say, digitize, use our digital wallet, you trust us, think of all the utility and convenience. And once you do that, and you get somebody to use your capability digitally, then the cost to serve evaporate if you're doing it yourself, which means that the marginal, I suppose, costs that they incur come down, and then the sort of flywheel spins positively. So omni-channel, interoperable, important for us. The one thing I will say, again, is because Africa is not a homogeneous operating environment, is that in certain countries where there is, I suppose, commercial monopolies that M&O-led wallets have, the costs of engaging with them on a digital basis are actually more expensive than cash. And so one of the things we've got to try and do is incentivize access, create the incentives for other businesses to come in and provide choice, and then that will sort of rectify itself. But it isn't a universal sort of proposition, and there is a lot of work to do to ensure that consistency and alignment across borders.
Perfect. Yeah, as you alluded to, options and competition really can be one of the drivers for bringing the cost down. Christian, over to you on your customer-specific perspectives.
Thank you, Nika. I think I'll be very neutral in my answer, so I'll remove my MTN hat. This question is pertinent, especially in Africa. It's like asking someone, do you want to eat or do you want to sleep, when they need the two? So the answer will be, I want to eat and I want to sleep. Cost is very high. I'll give you little statistics. I love numbers. So cost within Rwanda is 0.6 to 1%. Cost of sending money out of Rwanda is 6.8% average for a ticket of $100, between $50 and $100. Cost of receiving in Rwanda is 9.6% average. Cost of intra-Africa is 13%. I want to confirm what the ruling was saying. Is it ruling? It's quite painful. Even though we are making revenue, like I said earlier, it's extremely painful to do intra-Africa transaction, and which is very sad, because there's a huge opportunity, but for various reasons that I will not mention, it's such a pain. Cost of receiving from Europe, US, Canada, Asia is average 8, 9, sometimes 10%. So it's quite painful for people to send money, yet these people earn little money. I was recently in Istanbul and Paris before coming here. It's only one day between my trip. And I met few migrants, Armenian, Turkish in Paris and all that. Some of them were doing Uber, and they have relatives back in their countries. And you asking them, and I was asking them questions like, how much do you earn per day? How much is your rental? How much is food? And he still has people that he needs to send back home money. So when you add a cost, it becomes another problem. On speed, it's again painful. Thanks to partners like MFS Africa and Tunes, I'll give you a few scenarios why speed is very critical. 2 months ago, one friend of mine had his dad in Kenya for critical medical treatment. So when you go to the counter, they ask you to give a guarantee. And the guarantee, I think, was 2,000 USD. And they sent the money, it bounced. And they were the counter check to be received. He needed urgent medical treatment. And I don't know, we did, it was around 9 p.m. One person from MFS Africa team, they all woke up and they made sure we got the money in 30 minutes. So just imagine a scenario. I don't know if the hospital is going to receive them without that money, but we frequently get such scenarios where people know, oh, I know Christian, he works at MTN, I'm in Ghana, I'm in South Africa, I need treatment, I really need this money. And I'll give you another story. Sitoyo from M-Pesa, he was coming in a conference and he wanted to know how to pay his taxi, because I think they're supposed to pick him, and he didn't know. So we told him, no, download. We managed to do integration of your API. So he downloaded, put the taxi number guy, and he was able to see even his name. And the taxi guy was surprised because he called him by his name. He said, your name is so-and-so, yeah. And the taxi guy was surprised, like, how do you know my name? I said, no, from Kenya. We've done integration with MTN Mobile Money. I can see your number and send you money. And that was that's business as usual day to day. But when it comes to speed, there is speed of reversing the money, there is speed of receiving the money. And for me, that's the biggest challenge that we have today on sending and receiving money. You have multiple players in between, and sometimes the transfer can be a headache, or even the reversal can take 1 week, 2 weeks, and that's an area that we need improvement. Thank you, Nika.
Perfect. So it's like layering an onion, getting into the underlying, basically, reasons for high costs, and we're in different layers. You're peeling, and I'm getting into Sabine. We spoke about interoperability. We spoke about the value chain being quite fragmented, and many different players being involved in the whole value chain. So we know central banks are also really active in creating interoperable solutions, whether it's regional, like the solutions in GMAC, or whether you're looking at TIPS, GIPS in Ghana. Sabine, I know you've done a lot of work on that. Are these interoperable solutions promoted by central banks a friend or foe to the African remittances industry?
Thank you very much, Mika. And as all of the co-panelists were speaking, at every time I was like ready to jump from my seat and get into the conversation. So allow me to indulge me while I'm diving into it. Before answering your question, I think it's important for me to lay out the landscape. So last year in 2022, Africa NENA, in partnership with the World Bank and the United Nations Economic Commission for Africa, launched a report called the State of Instant and Inclusive Payment Systems. So that report did a landscape of live instant payment switches in Africa and ended up with 29 of them that are live. 26 are country schemes and 3 are regional schemes. And as we went through the typology of these schemes, there are 3 types. One are the central banks governed schemes. And I saw Dr. Seto here earlier. So GIPS in Ghana is an example of a central bank scheme. The second type is what we call a public-private partnership scheme. And usually it would be the central bank and private sector participants partnership. And that could include TCIB, that ruling has mentioned earlier. And the last type, it's a private association type, and an example of that would be PesaLink in Kenya. So now that that background is out there, the question of friend or foe, I will definitely say friend. And 3 with ripple benefits for customers on the demand side, for the supply side as well, for providers, and also for the regulators. And let me start with the customer. You know, the story of millions and millions of diaspora migrants is my story as well. I was born in Burkina Faso, studied and worked in France, in the US, in Canada, and I'm currently based here in Kenya. And throughout that journey, my family is Burkina Faso, and I've been actively, and still is, supporting my family back home. So when we're talking about the customer side, what happens when we send money to our loved ones? If it's a case of my mother, she's been an expert in distributing this money. So she would, of course, use part of it for household, buying what she needs. She would also send it to family members in the village, depending on the occasion. And she will also put some money in a small business that she has. So if you look at that lens, if there is no interoperable payment scheme at that lens, what happens is she cash out the money and she's gonna try to distribute it depending on which service provider the family member is working with. That has a ripple effect into cost for her. So the money that I sent, she receives is actually gonna less valued because she has to pay more for that. So interoperable switches that the central bank governs, especially if they are instant and inclusive, they will provide the rail that is interoperable. They will bring in a mandate for financial inclusion and really influence the costing within the scheme to be as low as possible, and will open the scheme to all service providers so that the playing field is level, and actors such as yourself, Toon, MTN, and Mukuru can all interact into that ecosystem. So the money I sent goes a bit further for my mother. So if you look at it from a provider side, and I'm sure Toon and Mukuru, you can say, if you have to go through integration with individual service provider, it comes with cost and time implication for each. Multiply that by 200 corridors that you said, and knowing that in a corridor you might have 5, 6 or more providers, that becomes quite complex, quite costly, and time-wise, it's also quite an investment. So if providers are able to be part of these interoperable schemes at a country level, you connect once and you have access to all of the service providers into the ecosystem. Again, you provide more access to your customers and it reduces the cost. And then lastly, if you look at it from a regulator's perspective, the regulator, the central bank governing the scheme, has the opportunity to mitigate, private sector interest versus, the inclusivity mandate that the central bank has. And he also has the opportunity to influence consumer recourse mechanism, consumer protection mechanism, so that when we send money, my mother is protected. She is sure that the quality of service is going to be there, and if the system fails, that she has a recourse to have a resolution for that system. So definitely a friend, and hopefully looking at, seeing more of these inclusive and interoperable schemes out in Africa. At least that is the ambition for Africa NENDA, to continue supporting this scheme and the scale up through the work that we're doing. Back to you.
Perfect. Thank you so much. I think you touched on quality of service, and I can bring the private sector hat into it, and I don't know whether GIFS is here, or TIPS, or any of them. Quality of service, these central bank mandated switches are not there. We have a lot of outages. We hear a lot from MTNs and Vodafones, and the rest that GIFS or TIPS or the rest are all the time down. So I think there's more that needs to be done on ensuring that the governance structure there is inclusive, and all the fintechs and mobile money providers are also included. But I think what I see a good connection between Africa NENDA and what BankServe does is that both of you are talking about remittances as a driver for digital economy and creating markets and creating more opportunities. And I want to touch on the African Continental Free Trade Agreement, AFCA. And in what ways do you think AFCA is impacting intra-African remittances, or vice versa? So this is both for you and Ruling.
Allow me to start. And Ruling is a partner, by the way. We also work with the TCIB team. I think earlier Sandra mentioned something. In trade, somebody has to pay, somebody has to be paid. So fundamentally, trade runs on a payment infrastructure, and the more seamless, interoperable, cross-border that scheme or that rail is, the more inclusive we will be, and we will be able to really accelerate trade, because one of the key barriers, aside from your trade negotiation, is how you're going to pay and how you're going to make sure that payment gets to you. So currently, the ambitions of the Africa Continental Free Trade Area can only be realized with making sure that the prerequisite payment infrastructure is there and is working efficiently. And to that extent, we are contributing to the digital trade protocol design to make sure that it includes requirements for interoperability of payment systems, requirements for cross-border payment systems that are seamless and include all service providers and can work and support the trade, intra-trade particularly. Ruling?
Yeah, thanks, Sabine. I think you've summed it up so well. But I think ultimately, a lot of benefits stems off getting the right people around the table, getting to an agreement. It creates the political will to drive things forward. But at the end of the day, and the message that we constantly share with all the markets that we deal with is, let's get going. Because it always comes down to the practical implementation of getting it practically working. And I think, yes, the establishment of that required infrastructure is the starting point. Create the rails through which, and mostly in our case as well, the remittance flows were used as a departure point. But ultimately, if you look at what is underlying, what's really necessary is the stimulation of the economy. And it comes back to facilitating trade. And I think to some extent we got confused with what trade means and ticket value. Immediately when someone talks about trade, we start thinking about millions of dollars. It's not the case. If I can express it in South African rands, for example, we've just done an interesting investigation just about the trade flows running. I mean, if we cap it at 100,000 rand, divided by 20 now, around about gives you a dollar figure. I'm not good at maths. It's smaller tickets. And that is what we're really looking at the moment. So but we're trying to solve for the $1 million transactions from a risk perspective. Why? You see, and I think that's where my previous point is, we've got to be practical about how we approach these things and solve for specific nuances. And that creates the enablement required to actually do open trade and make whatever gets agreed a reality at the end of the day.
Perfect. I don't know how we're doing on time. I have one final concluding question from all of the panelists. I don't see IFAD raising any brows. So basically, closing question for all of you guys. What are the potential sleeping giants of African remittances, and which corridors and markets remain unexplored? So Sandra, we start with you.
Africa is really big, 54 countries. I know a lot of people, if they have not been to Africa, they often get this confused. They think it's South Africa. But we have 54 countries. 1.3 billion people, youngest region in the world. We have massive, this is the future. Africa is where the future is. I cannot agree more with what Rulin said. The trade within Africa is very small. It's not even $100,000 trade we're talking about. We're talking about people who are moving funds $2,000 for trade, $1,500 for trade. For us to build this interoperable network between different payment schemes, between banks, mobile wallets, money transfer operators, it's really tough. It's very time consuming. For us to have 200 intra-Africa corridors, we have to have minimum 200 central bank approvals. And most of the time, it's both ways. I can tell you for my first 3-4 years in Tunis, I wanted to quit all the time. I mean, there's no business, right? So I think for me, the giants, we have too many giants. The banks need to work with the fintech players, with the mobile wallets, to be more efficient. The corridors, we have 50% of the African migrants do not leave the continent. So they move from Kenya to Tanzania, from South Africa, mostly from Zimbabwe to South Africa, from Mali to Cote d'Ivoire. Central Africa, for me, and West Africa, these are the underdeveloped markets and corridors, and we really need to put a lot more attention to these markets, especially with the support of the mobile wallets and the money transfer operators. As Andy said, there's no one silver bullet. It's not one size fits all. As much as we are going digital, cash is still king. A lot of people still are not privileged enough to have access to smartphones, to data, to the digital services to send money across border. So how do we make sure that we also include them in this journey? I think there's a lot of work to be done. As I said, we need to collaborate between the public and private sector. We need to make sure that regulators and the governments understand what we do and how we are doing it by giving them the comfort to get their support. Thank you.
Yeah, thank you. So who would like to go next? Or should I choose? And do you want to go next? Yes.
I mean, you talked about sleeping giants. I think we see a couple of trends. One, I think we historically have tended to think about Africa in sort of three regions: the Southern African region, the East African region, and the West African region. And what we see in our network as we sort of bridge those areas is that you start to get these link players in the middle, or puzzle pieces that have amazing flows that are being unlocked. And it's not because they're new flows and we've waved a magic wand and suddenly everybody's trading with each other. It's just that it's a far simpler proposition these days to disintermediate yourself from the payment use case by using formal fintech services than to do it yourselves. And so places like Zambia, Malawi, Tanzania, Kenya, there are amazing flows emerging that nobody's ever talked about or even known about, because a lot of them are person-to-person for small trade purposes. So if a kapenta farmer or a fisherman in Zambia wants to trade with a groundnut farmer in Malawi, previously they'd have had to put their kapenta fish in a sack, jump into a taxi, spend 3 days getting there and back, losing 25 of their productive fishing time to trade with a groundnut person, whereas they can now use a system that links the payment flow cross-border, outsource the transport to somebody else, and they've got a third more productive capability. And so there's an incredible flywheel effect of continuing to harness and drive those. And as you do that, I think you'll see a stronger harmonization between cross-border payment ecosystems and domestic payment ecosystems, where there's this incredible daisy chain where one person sends a remittance to 3 or 4 recipients on average. They then have credible use cases where they can keep that money in a digital form in a formal ecosystem as opposed to immediately withdrawing it in cash and spend and continue to drive those flywheels. And so our perspective is that the emerging giants are going to come not from a new flow that emerges overnight, but by a lot of elbow grease and seeing how we link these sort of connecting puzzle pieces together.
Perfect. Christian?
Thank you, Nika. For me, again, I think I've said it multiple times, is intra-Africa trade. I'm a strong believer there is a lot of money left within strong economies like Ethiopia, Nigeria, and so on. There's a lot of trade that happens actually more between West Asia and Africa. Yet there's a lot that can be done between countries, and that's an area that has been left behind. There's still a need also to look at outbound transactions. I don't know if you recall the statistic I gave. We are growing inbound 80%, so that inflows. But we are growing year on year outbound 1,610%. It's crazy. It's crazy. And destinations are Asia, so China, Europe, US, and so on. It's an area that we had abandoned for a while, but it's growing. And still, we still have the same challenges when it comes to reversal support, where you have multiple middle people in between. But when it comes to Africa, I think all my colleagues on the panel have related to it. There's lack of willingness from governments to create environment policies to support this instrument. And when you travel country by country, the list of requirements to get a license of remittance is very confusing. You really never know what you need to do, what you don't need to do to get a license. It's always navigating between AML, KYC, blah, blah, blah. We don't know, but you're like, okay, just give me a full list and then let me know. So it's sad that in Africa we still have those barriers of understanding. I don't know if it's lack of willingness or lack of understanding, but there's huge opportunity left in that regard when talk about sleeping giants. Thank you.
Sabine, do you want to go next? No.
Sorry. So for me, the sleeping giant is actually the over 350 million adult Africans that are financially excluded. The millions of MSMEs that are evolving in the cash economy. And if we want a truly equitable digital transformation in Africa, it is our responsibility to collaborate, whether it's policymakers, government, financial service providers, enablers such as ourselves, and development partners, to ensure that we are working to build an enabling environment that translates remittance dollars, the remittance money, into direct investment in the real economy, that we are working to enable remittance-linked financial services that will improve access to credit for these MSMEs to be able to, take advantage of the AfCFTA and increase, trade, that we can translate this money into also investments and provide savings and secure investment, pension, retirement for all the populations that are excluded. Because at the end of the day, the diaspora we're sending is really looking for the last, how do I support my family, and how do I make sure that that support translates into lifting them out of poverty, providing more security, and ensure that their needs are covered. So the sleeping giants would be the ones who would understand that no one can do it by itself, but there is such a great opportunity to collaborate together and leverage technology and innovation to provide these new innovative remittance-linked financial services. And I really hope to be able to work with all of them in the ecosystem to make that happen.
Oh, that was great, actually. So I think that's a challenge for everyone else. I don't know, Ruling, if you can raise it higher than what she mentioned, actually.
2 notches, definitely. I wanna latch onto, just in a SADC context, 157 million population eligible to be served. We're sitting with 62 million totally not served at the moment. Another 50 million that is ready to be served. And that leaves us with very little that actually is, in principle, underserved. If you want to talk about a sleeping giant, just go and scratch there in the markets. There's lots of sleeping giants. Don't judge a book by its cover. A business in the informal sector looks very different. The fact that you don't have a formal business account at a bank doesn't define you. Business is being done there. There's lots of money being traded. They in dire need of enablement. And I think our philosophy, let's go and wake them up corridor by corridor. And we got to have a very specific approach. It's always daunting when you hear these figures. We're sitting with a potential of 250 corridors or flows. And that's just SADC. But yeah, we got to systematically work our way through that. And hopefully, being in the position we are, we can play an instrumental role in taking the pain out of the middle mile, creating that safety security through the infrastructure that's being established, and allow the entities that's good at scratching and waking up those giants in those markets, let them do it. We need to be ready to facilitate those flows as it comes and when it comes. Thank you.
Thank you so much. Thank you, all the esteemed panelists. I want to open the floor to questions. One logistic, basically, input. All of your microphones are enabled, so if you have any questions, feel free to raise your hand. I see the audience is a bit shy. Just wanted to mention that there was one question that we wanted to address, which was on regulation and policy, but I want to see if there is any questions from the audience. No one? Oh, yeah, okay, perfect.
Thank you very much for giving me the floor. It's an observation more than a question to say when you are dealing with Africa, you always have challenges in terms of policies and regulations that are not harmonized. I come from the postal sector. We are currently seized with issues of trying to harmonize policies and regulations across Africa, especially when it comes to financial services, which I believe if it works well, since we are engaging the central banks as well, we may have an outcome that may favor what the speakers have raised as an issue. Thank you.
Thank you.
Quick question. Who can fix it for you in terms of the regulations? Is it the Association of African Central Banks? Is it the African Union? Who is it or who are the 3 key people who all of us can gang on to and say, fix it for them? Thank you.
Who wants to take this? I think it's ruling.
I think we're probably privileged because a lot of the time when we talk about who's going to fix it, I think the fingers are pointing back to the regulatory space. So let's fix all the constraints and the barriers and all of that. I think what we've got to get right is the stimulating the right dialogue. I think in SADC's context itself, from a regulatory perspective, the countries, the member states, from a regulatory perspective, has actually joined hands around the table and is actively involved, listening to the feedback that's coming from the market, from our members who's signing up to say, but it's the collective voice that says, help us, because, and we've already started seeing movement, and I think that's what delights us, because we know that we'll turn slowly, but having the right people around the table and having the right dialogue with the information to actually showcase it, and it's a collective voice, helps us. We've already, for example, been source of funds, those type of discussions in a short time, while we've already had consensus around 60 member states and the regulators around the use of source codes as it pertains to remittance payments. There's these type of things that we can stimulate to take some of those barriers away. So yeah, so we're probably just more fortunate because we've got a very specific setting in which we're working at the moment.
I think when we say the regulator, it's a blanket. You know, let's take the case of digital financial services payments. You have, yes, the financial regulator. You also have the telecom regulator. And now you also have competition regulation attached. You also have data. You also have privacy. So I think from my perspective, yes, it has to be led by the regulator in collaboration with the consortium of regulators, private sector, and other development actors that are intervening in the ecosystem, because it is an ecosystem approach, to really look at where do we need to harmonize, what regulation needs to be harmonized, and when they need to be harmonized, so we can get to that ultimate seamless space where all financial service providers can come in and deliver service seamlessly across the continent. There's been examples of harmonization of payments, particularly if you look at Europe and the payment service directives. There was one, there was two, and it was a consultative approach led by the regulator. So I think that, yes, the African Association of Central Bank, yes, the African Union with the political impetus to make the case for the urgency for regional and Pan-African policy harmonization to happen if we truly want to develop and operationalize the opportunity offered by the African continental free trade area. Hope that answers your question.
Thank you. We have one question and we have only 1 minute, but yeah, go ahead.
My name is Zia Beja from the Kenya Diaspora Alliance. My question is directed to Christian because he's given the figures, but I think any of the panelists can answer it. You've given us figures about the transaction fees in, was it Rwanda, and comparably to other jurisdictions. So my question is, how possible is it to harmonize those transaction charges such that it becomes beneficial to the diasporans who are indeed in the space of remittances? That short question. Thank you.
Good question. I'll be very quick. So Rwanda, well, the way the government Rwanda operates is more as a corporate organization. So I'll give you an example. I work for MTN Rwanda, private, but I'm also a presidential appointee on the board of City of Kigali, advising on smart cities. So I kind of influence policies on digital inclusion. So I sit from the private, I also sit on the public side to influence what needs to be done. I'll give you a scenario. When post-COVID, there was a resistance to continue doing digital transaction, natural behavior. And then we had to sit Ministry of Trade, Ministry of ICT, Office of the President, Central Bank, and to see what do we need to do. One example is MomoPay, merchant acquiring, was at 1%. We decided to slash it down 50%, 0.5%. We cap it free transaction, any transaction that is $4 and below, acquiring, 0 rated, unlimited. Today we've capped to 5 transactions per day. What happened? The result is we had post-COVID, when the lockdown was open, we had 47,000 merchant active 30 days. It was dropping to 38. We changed the regulation, and again to ruling point about the informal sector is extremely high in Africa. So today, as we speak, we managed to onboard merchant, informal merchant, just with national ID. We have 250,000 merchants from 38,000 in 1 year. Now, that is Rwanda. How do you influence Europe, Asia, Africa to change the policies? It's a very difficult journey, but I believe it will happen one day.
Thank you so
in a platform
much.
like this. Thank you.
Thank you so much, Christian. Thanks, everyone, for making it to our panel. I know it was quite early in the morning, and I'm happy to see a full room. Thank you to all the esteemed panelists for your contributions. And we're taking a break for coffee for 20 minutes. Thank you so much, everyone.